Australia's housing markets are at a crossroad, and that's what I'm going to share with you in today's episode of the Michael Yardney Podcast, when I have a chat with Dr. Nicola Powell, Chief of Research and Economics at Domain. We're going to unpack their latest affordability report, which shows how difficult it is for first-home buyers, but we're also going to talk about what's actually happening in the markets and how, on the one hand, home buyers, especially first-home buyers, are finding challenges, but on the other hand, buyer demand is powering ahead. Auction clearance rates are hitting multi-year highs. In fact, the spring housing market's shaping up to be supercharged. We're also going to talk about what the latest search data shows, what people are looking for when buying properties or wanting to buy properties this year. It's actually very different to last year. So in today's episode of the Michael Yardney Podcast, we're going to help you get some clarity on the many mixed messages that are happening out there, so you're going to be able to develop the financial freedom you're looking for through property. We're going to tell you what's going on in our markets, so let's get on with the show.
Welcome to the Michael Yardney Podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Nicola, welcome back to the show. I know it's been a really busy week for you, with quite a number of reports coming out from Domain over the last couple of weeks. You ever get any sleep around this report release time?
Look, it's quite an exciting time, Michael. So not really. It is spring. This is the peak season for the property market. And I think there's so much going on. There's so many interesting trends changing, not only in terms of buyer behaviour, but also market conditions as well.
I will put links in the show notes to the various reports from Domain so listeners and viewers can get the information. But I'd like to first start off with your affordability report. It says that the typical household now takes more than 8 years to save for a deposit. That's up from 6 years in the early 2000s. I think the answer is reasonably obvious, but what's driven that blowout in the time it takes for a young family to get a deposit?
We can really put it down to the increase in property price that we've seen over that period of time. And we've seen a number of property price cycles if you capture, that kind of 25-year period. And what we've seen is rising property prices. It actually far outpaced wages growth. And it means that for a first-home buyer, it's really hard to keep up with the market. It's really hard to save
Isn't
because
it?
wages just haven't risen at the pace that we've seen our housing market. So there's this widening gap.
So it's partly mortgage serviceability, of course, but also you need the deposit to get into the market. That's going to change in the beginning of October, and we'll have a chat about that. Mortgage serviceability has also increased to a significant portion of disposable income over the last 20 years too.
That is correct. So at the moment, it's around 54% of disposable income for a new loan. So that is mortgage stress. So that percentage to be under mortgage stress is 30%. So this really does leave households really financially stressed, reducing any buffers for any unexpected expenses that they may find come their way. And I think even with the fact, we know that we've had rate cuts occur this year, but what we have seen on the flip side of that is rising house prices have offset much of that relief that we've seen from the reduction in the cash rate. So I think there's still serviceability challenges, there's tighter credit assessments. I think this is all making it a very challenging environment.
Well, we know that from the 1st of October, the new first homeowner grants are coming in or schemes are coming in where first home buyers can get into a property with 5% deposit, and that's up to $1.5 million in Sydney, $1 million in Brisbane, all of Queensland, and $950,000 in Victoria. So that's sort of around the median prices. But if they've got the deposit and the stamp duty, they still are going to be stretched with serviceability, especially since they're taking such a big loan, Nicola.
Look, I think there is risks, I think, with this. And I think this is where caution needs to come when you're considering taking this 5% deposit and how much debt you're actually going to take on. I think with a scheme like this, you and I both know what it does to market dynamics, and it will bring forward a whole lot of demand. The way this policy is described is for all Australians. So there's no caps on the number of places. There is property price caps, but there's no income caps. And what we're going to see is it is going to bring forward a whole whole lot of demand to the market. And I think it's interesting because we do have rising investors as well in the market. And I think what you tend to find is investors and first-time buyers do go for similar priced
Yes.
properties. So what my expectation is that it's going to benefit particularly the first wave of first home buyers that take on this scheme, but we are likely to see it prop up price. So what that means is the next wave of first home buyers will be paying more for the same home.
We've seen that happen before. It's really an established homeowner grant because they're going to get money as they sell their properties to first home buyers, and then they're going to upgrade or downgrade right size. So it's definitely going to move the market. Interestingly, home ownership rates have varied at different age brackets. I know that your report looked into that, and again, I'll leave a link to the report in the show notes. Can you explain how younger Australians are faring compared to their older cohorts?
There is a massive generational divide, and what we have found is that home ownership rates for those under the age of 34 have fallen sharply. And that is especially so. I mean, it's fallen across Australia, but it's especially so in New South Wales and Victoria, which is not surprising, particularly in New South Wales, which is a very high priced market. What we found is those that were born between the years of 1987 to 91 are much less likely to own a home compared to those that were born in about 1950s. So, that post-war era home ownership rates were much higher. And what we're finding today is that it is deteriorating.
There's a couple of reasons for that, though, too, Nicola, isn't there? Because there's no doubt that there's the cost, as we're hinting at the moment, but there's also people are taking gap years, going overseas, leaving their family formation later, their marriage later. They're not putting down their roots as early as my generation.
That is absolutely the case. So we are seeing those life stages shift. And as you rightly said, a big portion of us now are going to university. More females as well are going to university. We're actually settling down later and having children much later. I think the average age, particularly in New South Wales, for your first baby is in the early 30s now. So we're seeing family formation stage happen a lot later. We're prioritising our careers. And I also think, what we want from our lives is also morphing. I think that flexibility, being able to be a bit more transitional, and you obviously get that when you can rent. You can easily move from A to B much easier. But I think it is a bit of dual. Life stages are changing, but also I think the high costs are also a major barrier for people to get into the housing market.
Now, your report compared Australia with larger global trends. How do we compare? Are young people around the world in the same boat?
They absolutely are. It is a global phenomenon. UK, US, Europe, they're all showing declining home ownership rates among the younger cohort. And the drivers are very similar. It's rising prices, it's income risks, and it's that later family formation. So those demographic shifts that we are seeing. And RBA research actually showed that the lower global interest rates explain much of the affordability squeeze that we're seeing globally. So the challenge isn't necessarily structural, it is cyclical as well.
Now, there was another report that just came out from Domain that I found interesting, and you've got access to what people look for. So they don't just look for a suburb when they go to Domain to find a property, but they put in what their requirements are. And boy, there's been a couple of changes over the last year.
There really has. And I agree. This is so fascinating when we're seeing exactly what buyers are trying to find. This is a high intent buyer. They're going on Domain and they're typing in, they might be selecting their property type and selecting the cluster of suburbs they want to purchase in, but they're also using a designated what we call keyword. So that might be something like pool, it might be granny flat, art deco. And one of the biggest shifts that we've seen is the increase in the use of granny flat. And in Sydney now, it is the number one search term.
That really surprised me. I wonder whether people are wanting to rent them out or whether your kids are not leaving home as early and they're just wanting to move their children out into a separate accommodation.
I think it's all of the above. I think I was really surprised. And look, it takes a lot to surprise me in the property space. But Pool is always number one, always, particularly for Sydney. And this is the first time I've ever seen pool knocked off of the top spot. So I do think it is affordability reshaping buyer demand, because there's other words, not only just granny flat, there's things like dual, so dual occupancies, that split block, which are obviously much more affordable than a house. But I think particularly you're right, in terms of that granny flat, I do think it's multi-generational living, perhaps it's a work from home space, or the ability to actually rent it out and have a bit of income generating. So I think it's a fascinating trend occurring.
So affordability seems to be one of the things that's driving this, but lifestyle, I was impressed that pool still is up high there, even though most people in most parts of Australia, an outdoor pool really is hard to justify. Art Deco, that's a term that people are looking for with, I guess, in general, older apartments, but they've got a lot of character, so I can understand why people
Yeah.
are looking for that. What about heritage? Were people looking for older things with character as well?
They were, particularly so in Sydney and Melbourne. So we had Art Deco as the seventh most popular keyword, but it very much was a dominant trend in Melbourne. So Art Deco was actually the number one search term in Melbourne. And again, it knocked pool off of the top spot. But we also have the word heritage for Melbourne in there too. So that was the fourth most popular keyword. And it really says a lot about the type of buyer that is now in Melbourne. I think, it's activated those that are really looking for their forever home. They're established on the property market. We know that heritage homes come at a premium. It has a certain type of following. It says a lot about the type of buyer that's active in Melbourne, probably wanting that value that Melbourne is now presenting, but also reaping the benefits of a lower cash rate.
Well, Nicola, talking about affordability then, not just in Melbourne, but around Australia, is there a trend from houses to apartments or townhouses? Are people searching for different types of properties?
Look, there are. I think one of the core things that I observe is that Australians do have a love affair with a detached home. So what we're finding across all of our major capital cities is the bulk of searches are for houses. And look, and it sits between kind of 70 to 80% of searches across our major capital cities. But what is interesting is more people are opting to choose for a townhouse, terraced home, or a unit. And I think what you tend to find is buyers go on what we call a dual search. So they choose a house and a townhouse because they want to see what is available within their area. What you tend to find is people are stuck to a particular location. It might be for work, it might be for schooling, it might be the lifestyle that the location offers. And then they open up their pool of search by considering different types of property in order to find something that's in their price band.
Well, townhouses mean different things in different states, but I do believe that more young families are going to look for modern accommodation on more compact blocks. Now, we even know that way out in the outer suburbs in Sydney and in some of the newer states in other states, they're building townhouses as well on more compact blocks just to make things a bit more affordable.
They absolutely are. And I think particularly as we move into the 2030s, when we see a big wave of baby boomers passing on their inheritance, what that's going to create is opportunity in middle suburbia. And I think what we'll probably see is a higher increase of medium density, and that is terraced homes and townhouses in these prime middle suburbs, which have good commute times. It's where families want to live. And I think, I'm very much an advocate of medium density housing. It's a great hybrid between a unit and a house.
I agree with that. In fact, all my kids live in townhouses just for that reason. They've traded space for place. They don't have a big front or backyard, but there's a park down the street, but they've got a good accommodation in a great neighbourhood that gives them the amenity that they're looking for. Now, the third report I'd like to just touch on is Domain's August Market Insights, where you said you're seeing a supercharged spring ahead of us. You also mentioned the great auction clearance rates, which are an in-time indicator of how buyers and sellers are feeling and of market depth. So what's ahead for our spring selling season? Well, we're
I
already
think
into spring, but
we are into spring, very early spring. Look, I think that what we definitely saw, if we look at August as a whole, clearance rates were strong, and pretty much in our big auction markets, Sydney and Melbourne, we were seeing the strongest clearance rates that we've seen since midway through 2023. And when you look at Sydney's clearance rate for August, and I like to look at a month because there's a big chunk of data, that clearance rate is 72% for Sydney over August, and Melbourne was just shy of 70%. So it shows that market momentum is building. And this isn't just a blip in the clearance rate. It has been consistent, particularly for Melbourne. Melbourne has been consistently improving each month this year, and Sydney very similar too. So look, I do think that we've seen confidence change. I think buyers are coming back into the market with confidence. We ultimately still have a lack of supply across our housing markets. So look, I do think I'm quite positive about this spring. I mean, positive for current homeowners. I am expecting prices to continue to rise, and I actually think we might be a bit surprised about the strength in price growth in some certain areas.
I agree with you. We're seeing that on the ground where open for inspections have got long queues for them, and every property that's going to auction misses. There's 3 or 4 people who are missing out who are still in the market. And I think, as we said, the first homeowner boost is going to start pushing the market from the bottom upwards. At the same time, your report, and I'll leave a link to it, showed that vacancy rates are at record lows, which I guess means that tenants are paying more, giving them maybe a reason to want to move as well.
Look, the rental market still remains quite challenged, and it's still a landlord's market across all of our major capital cities. I think we have moved away from those extreme rental increases that we were seeing, but I do think ultimately tenants will still be finding that there is competition. And I think for investors, it means that rental yields are probably strengthening too. But I think, though, what we're likely to see is one of the trends that we're observing at the moment is an increase in investor participation. So I'm hoping what we could see is actually start to slowly continue to shift some of those extreme rental conditions that we had previously been recording.
Well, we know that there's lots of building approvals for large apartment complexes going through, but just because people are getting a building approval, or developers are, doesn't mean they're going to get built, because there's still the financial challenges where the gap between what it costs to deliver new dwellings into the market and what people are currently prepared to pay, or what current prices are, is very wide. So the new developments are not as financially feasible as developers or banks who are going to lend them money need at the moment.
It is a challenge. And I think particularly if you are a buyer and you are going into the market and you are looking at an established home, which is actually cheaper to purchase than a new build, this is what steers buyers continuously to the established market. There has been a bit of an equilibrium or tipping point occurring in some of our major capital cities lately, and that's markets like Perth and Adelaide, where we're actually starting to see a better balance between the cost of new versus the cost of established. And that is purely because we've seen the market see such extreme price increases over the last 5 years. So I think those construction costs of new and the cost to buy established is now starting to even out in areas like Perth and Adelaide.
One of the interesting trends I found when I looked at your domain report was days on market. They're actually stretching out in some places, despite what we've said about how strong and firm the markets are, while they are shrinking in others. In other words, it's taking some vendors a bit longer to sell. What's behind all this?
And it really demonstrates pricing is everything, and being realistic on what your home is worth and pricing it to the market. I think that when you still continue to see lengthening days on market, what we'll eventually see is days on market will start to turn around. I think we've already got market momentum in other metrics in terms of clearance rates, pricing as well. What we're likely to see is that lengthening of days on markets might continue to happen for a couple of months, but what we should start to see is it will start to narrow. And one of the other dynamics is this is average days on market too. So what you will find is there may be some stock that's been languishing on the market for a bit. And that can actually really impact that average days on market. And
Of
we've got to
course.
remember that we did have slower conditions earlier in the year, and we're now starting to see that momentum coming back in. So my expectations, it shows that there's unevenness across our different cities and even within cities. But I think watch this space, Michael. I'm expecting the days on market to eventually start to tighten again.
Well, with less stock around and more buyers coming in, it's going to be an interesting springtime. And I agree with you that those days on market, if properties are priced correctly, are going to fall. Thank you for those insights. I guess your research really helps us see both the short-term pulse of the market, but I guess the deeper structural challenges that shape anyone in Australia who's wanting to get a home. I'm going to put links to those reports in the show notes, as I've said. I really appreciate you coming back regularly on the Michael Yardney podcast. So for listeners who are trying to make some sense of whether it's the right time to buy, to rent, to invest, remember the numbers tell us a big picture story, but it's more important what's happening to your personal circumstances at the moment. And we'll continue to bring you these conversations to help you cut through the noise and make more informed property decisions. Look forward to getting you back again, Nicola, when the next round of reports comes out.
Sounds great. Thanks, Michael.
If you're a regular listener or viewer to my podcast, you know each show I have a property trivia question, and I'm giving away 3 copies this week of Michael Yardney's Guide to Investing, a hard copy of one of my best-selling books. And everyone who leaves an answer is going to get a fully updated report. I've updated a report on what's ahead for property in 2026. And don't worry if you're listening to a slightly older show, your entry will still count. So go to propertytrivia.com.au, leave us the answer to the question I'm about to ask you. And there's a link in the show notes if you don't remember that. The question is, which Australian generation currently holds the largest share of the nation's wealth? Now, that's a pretty easy one, I think. Which Australian generation currently holds the largest share of Australia's wealth? propertytrivia.com.au. Leave us your answer. You'll get an updated report and a chance to win a book. I hope you learned from my chat with Dr. Nicola Powell that we're in a great stage of the property cycle where the next generation of successful property investors and multimillionaires will be made. But if you've been listening to my podcast for a while, you'll know there's no perfect time to invest, but there's a perfect time to get strategic, and it's before the market moves to the next level. So if you've got equity, income, or intent, if you're keen, now's the time to build a portfolio that will build your wealth so you can enjoy the financial freedom that property investors are looking for. And that's what we help serious property investors at Metropole do. Not with guesswork, not with hot tips, not with the latest fads, but with strategy, data, and real-world results using frameworks I've fine-tuned over 5 decades and we've been helping clients with for almost 3 decades. So if you'd like help building your property portfolio, whether you're a beginning investor or an experienced investor, or home buyer, go to metropole.com.au. I'll leave a link in the show notes, but go to metropole.com.au and have a complimentary wealth discovery chat with one of our wealth strategists to see how we can help you make some strategic decisions and get some clarity amongst all these confusing mixed messages.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
My mindset message to you today is nothing is either good or bad. So I'd like to help explain this by sharing a story with you that shows you why nothing in life is truly good or truly bad. Now, I hope this story will change how you see setbacks. The story I read a short while ago was that a farmer's only horse ran away. Neighbours shook their heads and said, "What bad luck?" And the farmer replied, "Maybe." Days later, the horse returned, but it wasn't alone. It brought back 2 wild horses. "What good luck," said the neighbours, and the farmer simply said, "Maybe." And then the farmer's son tried riding one of those horses, fell and broke his leg. "What terrible luck," the neighbours cried, and the farmer answered, "Maybe." Weeks later, soldiers came to the village. I remember reading this story, it must have been set back years ago, and the soldiers came and they drafted every young man for war. But the farmer's son was spared because he broke his leg. This time, the neighbour said, "You're so lucky." Once again, the farmer said, "Maybe." The story spread across generations because the farmer taught one timeless truth. Life events are neither good nor bad in the moment. They just are. What they become depends upon what happens next. So My message to you today is don't rush to judge your setbacks. Today's bad luck may protect you. Today's good luck may test you. Patience means everything. It eventually reveals the truth. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen-to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. And I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcast, there are 3 little buttons at the top of the player. Well, just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you as my way of saying thank you for subscribing. Just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favorite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?